Next up, we invite Mr. Dumith Fernando, the chairman of the Colombo Stock Exchange, who will address us on the Colombo Stock Exchange towards a quantum leap. Please welcome Mr. Dumith Fernando.
Good morning, everyone, and welcome to the Sri Lanka Investment Forum. It's a pleasure to address you today, and my keynote speech here is going to focus on the capital markets and in particular the Colombo Stock Exchange. The objective of my speech is as follows. First, I would like to introduce the Colombo Stock Exchange to those of you who are less familiar with Sri Lanka and its capital market. Secondly, I would like to reaffirm to existing investors the operating resilience of the Colombo Stock Exchange. Third, I would outline the exciting ongoing action plan of the Colombo Stock Exchange to become a regionally important, comprehensive financing and risk management product marketplace. And finally, I will reflect briefly on the very attractive investment opportunity currently available at the CSE. First, let me give you an overview of the Colombo Stock Exchange. The market cap of the exchange is about $18 billion. That's about 23% of GDP, so significant upside there. Of this, about 16.7% of the market cap is in equity securities and the remainder in debt securities. There are 284 listed companies, out of which 279 have equity listed, and about 5 companies with only debt listings, and 29 companies that have listed both debt and equity. There are 3 trading boards. The main board, which is for the largest companies, the Dirisavi board, or our second board, and a recent innovation, the Empower board, which is the board for SMEs and smaller companies. In terms of indices, the stock exchange is measured by 2 commonly used indices. The All Share Price Index, or the ASPI, as it is known, which is up 8.3% year to date, and the S&P Sri Lanka 20 Index, which is for a narrow group of more liquid companies, which is up 12% year to date. Let's have a look at the performance of the Colombo Stock Exchange. So as you see, the CSE has performed quite well relative to emerging and frontier markets. It has rebounded strongly since the depths of the pandemic, and the policy environment in the country has been conducive to strong valuations, driven by low interest rates, as well as very proactive efforts by the market regulator and market operator to promote the market and access to the market, while managing the risks among local investors, has led to very strong interest in the stock market in the last several quarters. Now, as you see, since the pandemic, the market is up 60%, which is in line with the MSCI Emerging Index. And this year, as I mentioned earlier, the market is up 8.3% and showing pretty robust momentum. Now, this next slide I would like to share with you is what's in the stock index. So the CSE is represented by a number of diverse sectors. They range from the food, beverage, and tobacco sector to diversified financials and banks, capital goods, materials. And generally speaking, I believe it's very well representative of the economy at large. There are a few sectors that I would say are not as represented, like real estate, like the logistics sector. But the good news is you can get exposure to these sectors through several of the conglomerates listed on the exchange, as well as through some upcoming IPOs from these sectors. The next question is, who's trading in this exchange? So this has shifted significantly since the pandemic. So if you go back 3 years ago, in 2018, 44% of the market was traded by foreign investors. Domestic individuals accounted for about 22% and domestic institutions for about 34%. Now, if you look at this year to date, we have foreign investors who are trading about 8% of the market, with domestic institutions at about the same as it was 3 years ago at 36%. But the significant change has been among domestic individuals. And this has been driven very much by the policy environment, but also the ease of access created by several new initiatives, which I will touch on later on. Now, I want to speak briefly about how easy it is for foreign investors, as many of you watching this are surely coming from all around the world. The Sri Lankan equity market, the Colombo Stock Exchange, is actually very easy for foreign investors to participate in. Since 1992, there has been a level playing field for local and foreign investors. The opening of accounts is a fairly easy process. Once you have submitted your documentation and KYC documents, the central depository system at the CESC will get your accounts opened and inform your market participant fairly quickly. And this roughly takes no more than about 2 weeks once you have your documentation in place. The market participants are, of course, stockbrokers and custody banks, so you can go through either of them to open an account. The other important question, of course, is the flow of funds. As many foreign investors know, this process has to be made very easy for this market to be attractive to you all. And that's exactly what it is. Since 1992, there is a bank account system called the inward remittance account or the inward investment account, which has been in place in different forms for a very long time without interruption. Your ability to bring your funds in and take it out without any further approvals makes this process extremely easy for all types of investors. So whether it's proceeds from the sale of your assets or the dividend proceeds and so on can be very easily taken in and out of the country with this. Now, the one other question I think we hear from a lot of foreign investors is about the tax regime. And here again, I'm delighted to say that following recent rule changes, the tax environment for investing in the Colombo Stock Exchange is extremely favorable to foreign investors. There is zero capital gains tax for the share market, and that applies to local and foreign investors. And for foreign investors, you have a zero tax on dividends as well. So it is an extremely favorable environment. Now, from a corporate governance perspective, and I touch on this because this is, of course, very important to any minority investor. The market regulator, which is the Securities and Exchange Commission of Sri Lanka, and the Colombo Stock Exchange, take corporate governance very, very seriously. And we have had a strict framework that is both strict but practical, that has been part of the listing rules since 2008, governing this regime. In particular, we're quite concerned on things like timely disclosures, corporate governance rules, and adherence to international accounting standards. In addition, the CSC is very focused on encouraging and driving sustainability goals and has been part of the United Nations Sustainable Stock Exchanges Initiative. Now, I will spend a minute for investors who are more familiar with Sri Lanka about point from last year, which was around the brief market closures during the pandemic. We were challenged by an operating scenario where many market participants were not ready for what took place. Now, without dwelling on the past, what I will say is good news. We were quick to learn some important lessons from that period. We were swift to move towards digitalization, not only of CSC operations, but operations between the CSC and market participants, and between market participants and clients. And as a result, and following a tremendous effort, which was a very compelling display of the dynamism of the market regulator as well as the market operator, rules and operating procedures were established to enable the CSC to operate under any circumstances. And I'm happy to report that despite multiple lockdowns and curfews we've faced during various phases of the pandemic, the stock markets, the Colombo Stock Exchange has operated as business as usual, and we have completely overcome some of the challenges we had earlier on in 2020. Now, what I really want to talk about today is why I am extremely excited about being part of this organization today. The CSE has provided a strong foundation for equity and debt financing in its history of 35 years. While economic winds have shifted even through an extended civil war period that ended 12 years ago, the CSE continued to be a primary venue for channeling funds to private companies while offering attractive investment opportunities. However, in a regional and global context, we have been somewhat limited in our product offerings. And so why this is the right time for all of you to engage with the CSE has a lot to do with an ambitious transformation program currently underway at the CSE. This is a program that will allow us to significantly evolve and allow us to take a quantum leap towards a much more comprehensive and multi-product securities exchange. Let me briefly talk you through the history of the exchange. Early in the late 80s and early 90s, we were one of the first exchanges to dematerialize and go onto an electronic clearinghouse, followed by electronic trading for the entire market. We had debt securities that were introduced in 1999, following which we had a long period of steady trading in the market. Now, in the last year, as I mentioned, we worked on a digitalization effort to make ease of access much more convenient for everyone. And also, we are in the process of introducing true delivery versus payment, or DVP, as market participants know, by the end of June this year. Now, what's exciting to us, though, is where we are planning on going from here. So we have a transformation program aimed at changing the face of this exchange over the next 3 to 5 years. And here is a quick snapshot of what we're expecting to do. So last year, we introduced REITs, Real Estate Investment Trusts, as a new product. And as I said, in terms of an infrastructure change, we introduced digitalization of the exchange. This year, we are about to complete the work on delivery versus payment. And we have multiple products in the pipeline, including repo trading on debt, gold-based products, and multi-currency listings for local companies. Moving on to next year, we are hoping to roll out mortgage-backed securities, stock borrow lending, and overnight short selling as well. At the same time, we will begin work on a CCP, or a central counterparty system, which will continue to help reduce the risk of trading on this exchange. And going into 2023, we would be looking at launching ETFs, or exchange-traded funds, and structured warrants. Through this whole process, we are also expecting that this exchange will be demutualized starting this year, and the government is already in the process of enabling that through its legal framework. So what you will see is that we have a very ambitious program, and that one that will allow investors to participate in not just a single product, but allow them to approach investment allocations across a number of asset classes, allow much better risk management, and hopefully create much more liquidity in this market in the process as well. Now, let me walk you through where we are as a market in terms of the investment potential. I would like to briefly reflect on the opportunity available at the CSE, where valuations are extremely attractive and the outlook seems quite positive. Firstly, the CSE valuations are very low relative to earnings. This, particularly in the context of relative markets, including regional markets, as well as some of the global indices, including frontier market and developed market, as well as emerging market indices, shows that the Sri Lankan stock prices are very attractive. This is particularly attractive in the context of how companies are performing at the moment. We can also look at the history of how the Sri Lankan market has been valued relative to other indices, particularly the frontier market Asia and frontier market global index. Now here you see that there have been times when the Sri Lankan markets traded at a premium and other times when it traded at a discount. What it shows you is at the current moment, we are at a slightly wider discount, which positions the market for fairly good buying opportunities and good value. And as I mentioned, this is particularly important in the context of having much stronger earnings outlook in comparison. I'll touch on that here, where you can see in the yellow bar, the all share price index or the CSE's index earnings relative to the earnings of other indices like the MSCI Frontier Index, the Frontier Asia Index, and the Emerging Markets Index. The yellow bar, as you can see, has been outperforming significantly in the last 3 quarters. Now, this has been due to a particular policy outlook that we have experienced, including low interest rates, as well as incentives for domestic manufacturing companies, which have driven earnings very strongly upwards. And we expect this outlook to continue. And therefore, going back to the previous slides where we saw that valuations on a relative basis were lower, whereas the earnings outlook seems to be much stronger. I believe that this will leave with you or with the message that you do have a deep value and a strong earnings outlook at the Colombo Stock Exchange at this moment. Now, another factor to consider is the level of correlation of the Sri Lankan market compared to other indices. Here we've shown you the correlation coefficients of the all share price index relative to other indices, both developed market and emerging market indices, as well as a global index. What you see is that the correlation of the ASPI to developed and emerging market indices is quite low. So what this tells you also is that you have a great opportunity for diversification in your portfolio by adding the Sri Lankan equity market to some portion of it. Now, one concern we've had traditionally about the CSE has been liquidity. And this is not uncommon for many emerging and frontier markets. But there is good news here as well. If you look at the liquidity profile of the Colombo Stock Exchange, it has grown rapidly over the last 2 years. If you look at the liquidity levels about 3 to 5 years ago, the market is trading at almost 5 times that. So the market has been doing $23 million a day of average daily turnover in 2021. That's more than double last year's figure of about 10 million. And what's interesting here is also the number of stocks that are doing high volume. So, going back 3 to 5 years ago, you had between 8 and 14 companies who traded over $100,000 a day. Today, you have 37 companies trading at that level. So there again, there is good proof that there is good access, good liquidity for a number of companies that foreign investors in particular could be very focused on. Now, in summary, I would like to close with a few key thoughts I was intending to share with you. First, as I mentioned earlier, the CSE is operational now, and its operational continuity has been reaffirmed. Our operating framework has been upgraded to overcome pandemic challenges. We've proven that this market will and can operate across all kinds of pandemic scenarios, including strict curfews and lockdowns. Secondly, with the CSE, you're looking at a significant transformation which would give us hopefully a quantum leap as a stock exchange, and this was launched last year. We have a pipeline of exciting new products that will be rolled out with world-class infrastructure, including DVP and a CCP. And this should hopefully give an opportunity for many of you with different types of risk appetites to embrace and look for opportunities in the Colombo Stock Exchange. And then finally, Sri Lankan equities in particular. What you have with them is a unique outperformance opportunity. There is deep value in the market, and I've shown multiple layers of statistics that bear that out. And we have market-beating earnings growth in the market. It is also a market that is very easy to get in and out of for foreign investors. And to the extent that there is investor appetite, there are a large number of very competent intermediaries, both locally and globally, who are ready and willing to serve you. So, in summary, I hope you will all take a very good look at the opportunities available at the CSC. Please leverage the many resources that will be available to you through the materials from this forum, resources available at the CSC and through your market intermediaries. We are very excited about the years ahead. And in the Sri Lankan capital market, I believe you will see a market that is going to outperform, not in terms of just valuations, but in terms of the rollout of new products and how you can actually participate in a much more holistic manner than hopefully many other markets have been able to do. So we hope you will join us in this journey and recognize the potential it offers to all of you. Thank you, and I bid you a very enjoyable and informative rest of this investment forum.